for the newer students. So they have to sort of unlearn a lot of these retail strategies. They have to unlearn a lot of these negative behavioral patterns that they've developed on their own or with the wrong type of coaching and mentorship or course that they've taken. So how did you overcome some of these hurdles of unlearning what you already used to? Hey, what's up, traders? Welcome back to the CTI YouTube channel. Today, I get the pleasure of meeting Andrew, who has recently passed the CTI evaluation. And you're going to hear a little bit about his story, a bit about his strategy. We'll go into his statement. Hopefully, we finish off with some really good trader tips and wisdom from him. So, Andrew, thank you so much for accepting our invitation. So, yeah, tell us a little bit about who you are and what type of trading style that you follow.
Hey, Rodrigo. Yes, thank you for having me. I've been a paralegal for about 17 years. I came into trading about 6 years ago, and just like anybody else, I was searching YouTube, looking for strategies, committing my own funds to private brokerage account. Went through all the struggles, just like anyone else has done that we usually encounter. Yeah, it's been, like I said, been trading for about 6 years. I've kind of been through a couple strategies and methodologies, and I had to find something that really fit my lifestyle or my day-to-day. I tried, swing trading. I tried support and resistance, breakout trading, and stuff like that. And it wasn't until I had a mentor, an actual reasonable mentor, he was able to break it down. This is probably 2017 timeframe. And I gravitated to his webinar, and it was a no fluff webinar. And I realized he wasn't just trying to sell me a program in education and I'm going to have to keep paying to get more education, right? So that kind of stuck with me and taught a lot about how the market works from his theory and how he was taught. And once you realize that it's all controlled by the big banks and how they rinse money through the market, how us as retail traders, how we can adapt to that and find our edge.
Yeah.
So long as we have discipline, we have a high probability of being profitable.
I'm really glad that you mentioned that it was when you found a mentor, when you accepted the fact that you need that guidance. It was at that moment when, of course, things started progressing in your trading. As a coach myself and a mentor, I have, as you know, we have the bank level community that I co-founded with Diego, my cousin. Of course, see the benefits of being able to teach what we do. But there's a struggle that I've also noticed about unlearning. So for the newer students, so they have to sort of unlearn a lot of these retail strategies. They have to unlearn a lot of these negative behavioral patterns that they've developed on their own or with the wrong type of coaching and mentorship or course that they've taken. So how did you overcome some of these hurdles of unlearning what you already used to?
It was really as a gut check. So when I first started, it was, mainly trading the London session. And if you see a trending market, usually you see where, the Asian range is as my mentor would call it. And I know many that do follow this channel will know exactly who I'm talking about. You break out of that Asian range and they run it up, hit the stop because they can consolidate, run it up, hit the stops. And once they hit the stops, they take off the other way. Usually it's in a form of a double M pattern or, or single railroad pattern or what have you. However, with that mentor was able to break it down using a simple 3 EMA strategy, 5 EMAs, Trader's Dynamic Index. I still use that today in my trading plan. And then he was able to fine tune that strategy to now I mainly focus on railroad patterns using EMAs to help confirm that is a solid entry. Even through the evaluation, I'm fine tuning my strategy as well. Things that I picked up and learned. And you touched on the unlearning, the bad habits. Yeah, my mentor, he's a great trading psychology mentor. Of course, we're all curious, humans, right? And so I kept looking, trading psychology. I was like, I already got the method. I already got the strategy. But what about up here? So I go to free YouTube videos. And what was it, probably about 4 years ago, ran into, Mark Douglas. He's well known as a trading psychologist. The main eye opener for me was, everybody talks about hit rate, right? What's your hit rate? And, he's like, I could care less what your hit rate is. You got to be profitable. And most profitable traders, their hit rate is not something that you would just, put on a bumper sticker and champion that around. He said, you need to watch out for the clusters. So you got your overall hit rate. Yeah, you might be at 80%, but in that 20%, you might have clusters, or your 80% hit rate might be off, but you'll run into a stream of clusters, and you got to be able to manage your capital. You got to protect your gunpowder and keep it dry. And that is definitely with CTI's evaluation. That forces you. If you don't abide by that risk management rules, you're going to get rinsed out and you're going to, like I've done before, and have to purchase a reeval. So it was like, you know what? You got to be able to avoid the clusters and continue to fine tune your strategy. So that way, whether that's the times of day you trade, times of the month you trade, times of the week you trade, during the evaluation, I found that, it was just occurring to me. I was like, anytime that I follow Forex Factory. It's common known for traders, right? But the Forex Factory news release calendar, I follow that. If I see a FOMC red folder news event, like if it's a minutes release or speaker or any given country central bank or government speaker is going to come on and talk about interest rates and such, I learned that the market tends to consolidate. Like I said before, I'm an intraday trader primarily, and then if I have a 4-hour signal or a daily signal, I'll hold those trades over past the day. So to avoid the clusters, I found that, during the FOMC events, they tend to create false signals, or create a signal rather, and then consolidate and then go the other way. Yeah, that's something I'm adjusting on my trading plan and follow accordingly with the PM account.